Hey guys, today we're looking at the preparatory examination that was written in September 2024, accounting paper 1, and it's from the Gauteng province. We'll specifically be looking at question 4, which talks about corporate governance. So, at most times, this is a topic that students or learners tend to ignore, or some usually don't really get the time to attempt this question. Tell you what, this question is one that could help you. It could help you maximize your marks, increase your marks. So make sure that even under time pressure, you try and attempt this question because it has some of the easiest of the questions in the paper. So in this paper, it was the last question and it was allocated 15 marks in just 15 minutes. So there's just a minute for each mark there. Okay, so question 4 says you are provided with an article about an internal auditor who has been found guilty of misconduct. Use the information presented and your knowledge on companies to answer the questions. Let's see the information that we're given and highlight a few things that we might need in our response. So the information says rinse and repeat the ongoing saga at Eguruleni Ltd. An internal auditor has been found guilty of serious financial misconduct, including mismanagement of funds and the falsification of accounting records. So, this shocking revelation has highlighted the vulnerability of organizations to internal fraud. Right, so there's internal fraud. Then it goes on to say Mr. Gell, who was supposed to be the watchdog, turned out to be dishonest. The Eguruleni Ltd has been receiving unqualified reports. Okay, so that's something that we are going to talk about when it comes to audits. So they have been receiving unqualified reports due to inaccurate financial reporting. So these audits or reports have been unqualified just because they have been cooking the books. They've been making inaccurate financial records such that they then got unqualified reports. Remember, unqualified reports are those financial statements that fairly present the information, which means they are free from any errors, right? Then it continues to read the individual entrusted with ensuring financial integrity breached that trust by misappropriating funds for personal gain and tampering with accounting books. Okay, so this person was tampering with accounting books, like I just said, they were cooking to conceal their actions. This breach not only undermined the organization's financial stability, but also eroded trust in its governance. Restoring confidence will require a concerted effort to strengthen transparency and accountability throughout the financial sector. Okay, so we're going to go to 4.1. 4.1 says the shareholders of Ekurhuleni Ltd will not be happy with the audit reports of the past 5 years after the recent findings. So remember that they found out that now there were inaccurate financial reporting, so they won't be happy in that case. Now we are needed to explain what an unqualified audit report is and why the shareholders will not be happy. Okay, so let's go to our answer book. We need to explain what an unqualified audit report is. As I just explained, an an unqualified audit report is one that is okay. Okay, how can we word this? So the unqualified audit report is one that shows that financial statements are fairly presented and are free from any errors. Right. So some people might decide to say the financial statements, I just say the FS are in accordance with the accounting standards. Right, accounting standards could be GAAP principles, and IFRS, so International Financial Reporting Standards. Now, we need to explain why the shareholders will not be happy. In this case, we know that what we found out is that there were inaccurate financial recordings. This means that they were cooking the books, like we've just read. Now, such things could lead to losing potential investors or even existing investors pulling out or withdrawing their investments from the company. Now, all of this would then lead to people not buying the shares of the company, thus leading to a decrease in the share price of the company. Okay, I'm just going to word this in shorthand. So, number one, losing potential and existing shareholders. Okay, then number two, I can just mention a decrease in share price. Remember, when you're answering on your exam or test situation, do not use shorthand. Make sure that your sentences are full and they are concise. Make sure that the marker understands what you are trying to say to them. Right. Then 4.2 says watchdog or gatekeeper. An auditor serves as a watchdog regarding several important functions to ensure transparency, accountability, and compliance within the company. Now, we need to explain two key functions of an auditor in the company. Okay, when we go back to the scenario, if you don't know what an auditor does, it's all of these things in the scenario. We looked at falsification of accounting records, mismanagement of funds, internal fraud. I'll just focus on those three. Now, when you're looking at these three things, an auditor is supposed to mitigate these risks from happening in the company. And we mitigate risks by implementing internal controls in the company to protect it from such things. We protect it from internal fraud, we protect it from cooking the books and the mismanagement of funds. So, what internal auditors do is that they implement internal controls. They help mitigation of risks and other negative factors, let's just say negative threats that may harm the business or the company. Okay, and you can think of many more that you can get from the scenario. Okay, then someone could argue and say they express an audit opinion, an audit opinion, like we've just seen there. Okay, I'm just gonna stop at 3, then you can continue thinking of more. Now 4.3, moving on quickly, says shareholders concern and company reputation. They've just given us the answer here: company reputation and the concern for shareholders. Now, as a shareholder, explain two effects that will be of concern based on the findings in the article. As a shareholder, now you are one of the existing shareholders of this company, rinse and repeat. So, what would be your concerns on the reputation of the company and anything else based on the article? Number one. This question is a bit similar to this one: why shareholders will not be happy. If you're not happy, something is a concern, of course. Then make sure that you don't necessarily repeat your answers. Make sure that you try and find different responses to these two questions. The first one, the company. Let's talk about the company reputation. So the image of the company will be negatively affected. Okay, will be negatively affected. That's the reputation of the company. Now, as a shareholder, we have this auditor. The audit people or auditors are part of management. Now, if they are the ones that are misappropriating financial records, then I lose trust in these people that are managing the company. So as a shareholder, I would lose trust on management. Okay, I'd lose trust on management. Then one last one I would give is that this might result in financial losses because of lawsuits. Because now, if you are lying to the public and you're saying this is part of your financial records, whereas it is not, it is a crime because you're going against the Companies Act. So now then that would result in lawsuits, and lawsuits, of course, you would have to pay, go to court, and then it results in financial losses for the company. So we can say financial losses due to lawsuits filed against the company for breach of the law. By the law, I mean the Companies Act. Okay. Now 4.4, last question, says the CFO of Ekurhuleni Ltd has emphasized that maintaining financial data integrity is crucial for the company to ensure accurate reporting and compliance with regulations. State two practices that can help to maintain the integrity of accounting records within the company. Right. So the key thing here is financial data. As soon as they say financial data, what I'm thinking of software, because we're working with data, something we interact with on a daily basis. It's computerized, right? And we need access. So these are the three things that I think of as soon as I talk about data. Because when we're working with data, we are talking about technology each and every day. We have our phones, we have laptops, all those things. Now, imagine in a scenario we have the company, right? Now, the question says two practices that can help to maintain the integrity of accounting records. Now, maintaining the integrity means that no one can easily change the accounting records like they did in the article. We don't want to have people changing numbers on our financial statements easily, and we don't want people to cook the books. That is how we are going to maintain integrity. Now, the first thing that we can do, as we are using softwares, computerized systems, and we don't want just unauthorized employees to have access, and also those ones that are working on the data, we want them to have the necessary skills. We cannot say we're using Microsoft Excel to input our financial data to compute our financial statements, but the person who is doing that doesn't know. So we need to have proper training for such employees who are in charge of making our financial statements, such that they do not end up messing the data. So the first one, we can say usage of reliable and secure software systems. right? We need it to be reliable. Whenever we want to do it, we can use it. It is secure, it has access controls. So not anyone who wants to access the financial statements, the data, can easily access. It needs you to have, I don't know, maybe a password, a certain PIN, or something like that. And then the second one, train. We can train employees that are in charge to enhance their skills. Right. So these are just the basic two practices that we can use, but take some time and think of more that you could apply on the integrity of financial data. Nonetheless, that is all for corporate governance. Do not forget that there's still more from this. You can either expect qualified report, like here we got unqualified report, and in some instances you can get corporate social investment, corporate social responsibility, the triple P, or the triple bottom line. So what you can expect on your final exams is that on corporate governance, and make sure that you're able to think outside the box. Other than that, thank you so much for watching. Do not forget to subscribe, like, and drop a comment on any accounting burning questions that you might have, and I'll definitely see you in the next video. Cheers.